Now, starting off investing, there are so many different products out there. The cash ISA, the stocks and shares ISA, the help to buy ISA. Now, it can often get quite confusing of where to start and what these things actually do and what they mean. A question that I've been getting a lot recently is, what is the stocks and shares ISA and the difference between that and a cash ISA? That's exactly what we're going to be delivering today on this video. What each product is, how they help you build wealth, and what are the benefits and drawbacks of each ISA. Now let's take it right back. What is an ISA? An ISA is essentially a way to protect your money from tax. So any profit you make on your investment within those ISAs are tax-free. Now, so many different ISAs out there. However, we're going to be touching on the stocks and shares and the cash ISA. Now, why would you want to put money into this ISA, and how much can you actually deposit into each ISA? Now, the maximum you can deposit spread across all ISAs is £20,000. Now, it's up to you how you want to split that, but the maximum you can put into the ISA is 20k per tax year. Now, many people will use each ISA for many different reasons depending on their situation. Personally, I just take advantage of the stocks and shares ISA as I want to have a little bit more control of the investments that I make and deposit that into the companies or index funds and ETFs that I personally believe in that are at good prices. Now, people may want to use the cash ISA for many different reasons as well. For example, if you're just holding money into a regular savings account, you're probably only getting around 2 to 4% interest on that account. Now, however, if you just transitioned and moved that capital into a cash ISA with Trading 212, for example, you'll get a 5.2% return on your cash for literally doing the same thing and for having your money deposited into that ISA. Now, starting off with the cash ISA, if you head over to the Trading 212 website, you'll be prompted for the stocks and shares or the cash ISA. Now, firstly, the reason we're using Trade on 212 is because 5.2% is the highest of any current brokerage out there at the moment of recording this video. Now, the 5.2% is essentially determined by the Bank of England, which, if you want to know a little bit more why these rates could be cut later on in the year, I suggest you would go and have a look on my previous video, which touches on that topic. However, the 5.2%, like I said, is the highest right now. So creating an account is of course free and you can withdraw your capital at any time. So it gives you that flexibility there as well. Personally, what I take advantage of is the stocks and the shares ISA, as you're essentially investing your capital into companies that have potential to yield a higher return than the cash ISA. So it gives you that flexibility there. Of course, it comes with that risk as well. Like I say, I'm not a financial advisor. This is just my opinion and my journey with investing. So there's commission-free trading, which again is personally is the best platform out there when it comes to commission-free investing. There's no account fees, and you also can take advantage of that 5.2% as well. Now, 5.2% isn't the greatest return in the world, right? However, considering you're just putting your money into cash and you're not really making any adjustments to the portfolio or anything like that, 5.2% isn't that bad. It's actually very good when you look at it like that. So just to quantify it, if we're looking to invest £1,000 as a starting amount and just to contribute £100 per month into the account, you could yield obviously 5.2% per year. That's considering that the Bank of England rate doesn't get cut at all, which again is unlikely. So just by playing around with these calculators, you can see what you could look to gain if you was to stick to your investing goals and contribute the certain amount that you're looking to contribute per month. Now, as I said earlier, the reason I prefer the stocks and shares ISA is because it gives me that flexibility. I can do some analysis and I can have a look at the stocks that are performing well, and I can really choose whether I want to be involved in specific companies or if I want to wait. So it gives me that flexibility to choose essentially what I want to do. Now, if we're looking at the S&P 500 on average, you could yield about 9 to about 11% per year. Now this obviously depends on the market cycles, so sometimes markets essentially will be up, sometimes they will be down. All markets will go through good times and bad times, but the key to that is staying invested and applying consistency to your investments, so you'll average out your price over the long term period. Now this is why I like to invest in individual companies as well as the well-known indexes, because the individual companies, although they're a little bit more risky, it will essentially help increase my returns, as well as investing into something that could be seen as less riskier than an individual stock, which is an overall ETF, as you're purchasing a segment of a market, for an example. Now, playing around with this calculator here, if you was just to start with £1,000 and you was to average in £100 per month over a given time period, let's just say over a 5 or 10 year period, you can obviously see some pretty good returns. Okay, it's all to do with consistency and implementing an overall strategy of your investments. You're not overall getting too excited into each companies, but you've got a plan there and ready to deploy capital. Now, if I was to summarize each ISA, I would essentially summarize the cash ISA as a glorified savings account. As you're not actively investing into this account, you're just giving the account your money, and then that money will be invested into something called a money market fund. Now, if you're interested in learning more about these funds, leave a comment down below, and then again I can unpack that on another video. However, if you're looking to actively invest yourself, whether that be in choosing your own stocks, choosing your own ETFs, the stocks and shares ISA is the one that would most likely work well for you. So one I personally choose, as again it gives me that flexibility as well as the potential for higher returns over the long term. So it all depends on your situation, whether or not which ISA that you want to take advantage of, and if you can bear the risk that are associated with investing as well. Now that is it for the video, guys. Let me know your thoughts in the comment section below, and I'll see you on the next video.